What's up, everybody? Welcome back to the channel. Today we are going to go over Bitcoin, Ethereum, and EGLD. Just as usual, give you an update on everything that's happened. I know it's been kind of a crazy weekend, but hey, it was a good weekend. So let's take a look at how things are looking now and what we might be able to expect in the next few days or even throughout this week. We'll have more videos during the week, but there's a few things that I want to show you. Now, what I'm also going to show you during this Bitcoin portion of the video is how to create a Fibonacci retracement. I'm sure you've heard a lot about this, and I want to give you a quick overview of just how you do it in TradingView and what you might be able to use it for. So let's go ahead and get started. We're going to kick it off with Bitcoin. All right, so the first thing we're going to do is we're going to take a look at what's happened with Bitcoin. I mean, the key thing to see here is that Bitcoin has really been trading well between this range. We've been looking at this yellow line and green line for quite a while, and what we're really looking for is for Bitcoin to break over this green line and flip it into a support. And if it does, we are basically trading anywhere from 50 to 52,000. Now, the first thing that you need to know when looking at moves like this is how to create a fib retracement. Now, a fib retracement is basically, so the Fibonacci sequence in mathematics and in geometry, symmetry, whatever it may be, Fibonacci sequences show up in a variety of different things. And they've been used in mathematics for many, many years. And at some point, someone must have figured out that you can apply that Fibonacci pattern onto stocks and other types of assets that are trading. And when you do that, you can see some patterns that apply with numbers over time. So in TradingView, what you're going to do is you're going to go to the left-hand side where you have this like pitchfork icon. You click the little arrow and you find fib retracement. And it looks like Alt F also works as a hotkey for that. So you select your fib retracement tool. And then what you want to do is you want to go down to the base of to the first candle of a major pump. So in this case, we saw we had our last downside here, and then the pump really began at this green candle and Bitcoin moved really high. So what we're going to do is we're going to start it off there, but we're also going to choose a target. Okay. So I'm going to take this up to maybe around $52,000. Since $50,000 is so close to the top, I see 50,000 as being something that we're going to hit pretty quick. So I'm going to go up to 52 as our top so we can monitor it to there. So what we do is we go to the base of this candle here. So I'm going to turn my fib retracement tool back on. And I go to the base of this candle, I put my mouse there, I click, and then I drag the fib retracement tool, and I go up to the max level that I want to look at. Now, cool thing is you can get close to it and then just close your fib retracement. Next thing, you go back to your cross, and now I can just right-click on this fib retracement and lock it into place if I want. But the first thing I'm going to do is I'm going to go into settings, and I'm just going to change my start and end position. The start I can keep exactly where it was because I chose that. The stop, I'm going to make it exactly at 52,000, and I'm going to click OK. So it adjusted this for me, and now I'm going to lock it into place. Now, one thing that you'll see when you create a fib retracement is that you'll see that it highlights certain levels if you're looking at the right trend. At this line and this level, you can see we've actually come and touched the trend line in the middle, right? We have also come and hit the top as resistance. We came and hit this line as support. You can see this entire green line, the .382 line. So if I zoom in, the .382 line here, this green line has been used as support numerous times. It was used as resistance here, and then it was used as support the whole way through. Now we're trying to break past the 42.8 level. Now, what does this tell us? This is basically telling us that we have some key areas where we might hit resistance on the way up, might hit support on the way down, and might be trading between. It also tells us that to really go up to the 50,000, 52,000 level, getting past 48,800 and holding above it is key because this is our 236 level. That's our highest level on the fib retracement. Anything over that could be overextended. So in this case, whatever the red is in, normally I like to have that in an area where the RSI would be going into the red. But anyways, you know how to set up a fib retracement now. You know how to look at support and resistance levels. So keep it in mind. Now with Bitcoin, we saw a drop. Okay, now that Bitcoin drop went back down to 45,700 about, or 45,800. And we recovered from there pretty quickly. We came back up half the candle and then started moving our way back up to the red line here, which is the 48,000 level. I'm going to switch over to the 4-hour chart. And on the 4-hour chart, if I zoom in, you can see this a little bit better, right? We came and touched this line, and then we started recovery. Now, at the same time, Bitcoin had this correction, everything else corrected. So with Bitcoin, I mean, there's not a ton to talk about. It's very bullish right now. There's a lot of support being built up. One thing I really like about Bitcoin is that it spent a long time in between the $36,000 to $40,000 level. And already in just about a week, less than a week into the closer to the 50,000 level, we're already putting in the same amount of volume that we had at 38,000. That means that there's a lot of buying going on in Bitcoin, and the price is very stable here. And this is a good thing to see. If we can build up even more support here on the right-hand side, you're looking at a volume profile. If this can become even more and more and more, it's much better for the way up. It shows us that, you know, it's something terrible would have to happen at this point for Bitcoin to fall below like 44,000, because this entire area has so much volume. So just a good thing to keep in mind. Bitcoin's looking really strong, very healthy. I can actually get rid of that fib retracement now because we don't need to look at the support and resistance levels. So I'm actually going to lock it, and then I'm going to right click and hit hide. So now I can keep an eye on this, and basically what I'm keeping a very close watch on is for Bitcoin to break above its previous all-time high of around 49,700 and have hit break past 50K. That is the next move for Bitcoin that we really want to see on the way up. And if it crosses over this green line at this point, we're talking about Bitcoin trading at 51,000 and starting to flip that area as support. So we got to watch it to see how soon that happens. Okay, that's it for Bitcoin. Let's move on to Ethereum. Now with Ethereum, I already have the fib retracement created, so you kind of know what to look at now. First thing, when we saw the drop yesterday with Ethereum, Ethereum dropped down right to the trend line. If you look at this 4-hour chart and we zoom in on it, you can see when Ethereum fell, it hit the trend line. So if you had a fib retracement like this, you would have had a good idea that this trend line here could provide major support. And if so, you might have placed an order at around $1,670. That would have been smart. Now, Ethereum has gone back up and come right back to the levels it was trading on before the correction, and it's back up to around $1,830 now. It's been having a very strong move up. So what we really want to see is Ethereum going to keep that momentum going, and is it finally ready to break past the 1900 level? That is our next key area to watch, because once we hit 1900, you can see on the right, there is not much volume there. So we're going to break past this. Once we break past this, we have a ton of volume between 1600 to 1800 giving us support. So I'm not expecting us to fall below this area anymore. This entire area here looks to be a massive area of support for Ethereum. So seeing it go below 1600 again might not happen. I personally don't think it will. It could, but I think it's very unlikely because of the amount of volume we've put in on this side. So keep that in mind. The next target for Ethereum is really to see it go up to 1900, and we want to see how it reacts there. The goal would be to see it flip this red line at around 1830 as support. So what I'd like to see with Ethereum is a move like this. I would like to see it continue to move up and hit resistance at 2000 and then come back down and test 1834. Now, seeing a move like this would be really good for Ethereum because it would take it up to kind of an overbought level. It might start passing, the RSI might start getting a little bit high, and if that happens, you want it to correct back down so some of the people that have been in it for a while take their profits, and you have more people buying at those higher levels so the price can keep moving up. So with Ethereum, I mean, I'm not seeing any issues. This was a very minor correction we saw with Ethereum, and it hit the perfect levels to keep moving. So Ethereum, in my opinion, looking very, very good. I'm going to hide this so we can look at it another time. All right, and now we are going to move on to EGLD. All right, with EGLD, we saw a major drop. Now, if you follow me on Twitter, you might have had an idea that this was coming. Basically, what I had done was on Twitter, I had created a post that said that had a screenshot of this when right before the correction, like a couple of hours before the drop. And what I told you at that time was that this triangle has changed into a descending triangle. Now, when you have a descending triangle like this type of triangle is normally bearish. That means that you're going to have a drop out of it. Now, it's not always going to be a drop, but the majority of the time, it's a drop. So I put down on Twitter that in order to invalidate this pattern and show that we're going to move up, we needed to break around 165 to 170. That would have been a move like this. From the area that we were at, it would have needed to go like that. That would have broken out of this pattern and it would have invalidated the descending triangle. That's not what happened. We actually dropped right below that descending triangle and we had a major correction for EGLD, and it was a wonderful correction, honestly. Basically what we saw, and I'd also, when I did that post on Twitter, I'd given you my downside targets. I said if we do have a correction, we're going to expect support at around 125 to 130, and I'm going to show you here how I came up with those levels. So basically when we had the correction, we went all the way back down to around 100. 98 was the bottom. So if you'd put in an order at like 100, you would have been golden. You would have already made a lot of money on that order. But anyways, we went down to around 98 and we immediately in the same hour, so if we switch this to the hourly chart, you can see on an hourly time frame, within that same hour, we came back up, and within the next hour, we had started trading at this line. I mean, it was exactly on this 786 line where we got support. And if you look at the price there, look at the right of the screen, the price there is around 127. That's why I said that if we drop, we're expecting support at around 125 to 130, because that was right around this Fibonacci retracement line. And that Fibonacci retracement line was our next area of support. And you can see now, since the correction, we've actually put in a lot more support there. We've gotten a lot more volume. So this is looking like a much better area of support than it was before. And because we didn't have a lot of volume here, that's why we fell right through it. Now, the thing is, you got to remember during these corrections, do you believe in the asset? Do you believe in the use cases? And if you do, then your decisions should be made based on your understanding and belief of the asset, and you should be making moves that take advantage of whatever the situation is in the charts. Whatever the price is, you should have a strategy for it. So, for example, for me in this scenario, I already had orders sitting at 130 and 115. And my logic was that if it hits 130 and it gets support at the 130 level, at least I'll get an order at 130. Now, I also put one at 115 because I thought just in case it falls below the 130 level, I'll be able to pick up a little bit more, a little cheaper. So I had that in. The best situation would have been is if I took my 130 order and I split that and I put some of it at 100. But the reason I didn't put any orders at 100 is because I just did not think it would go that low. And that was a mistake on my part, right? It did go that low, but it got bought up very fast. And you got to plan for those scenarios. If it does go down there, do I want to have an order just in case? You know, so either way, I'm happy with where my orders triggered and they're doing well right now. So it turned out to be a wonderful correction. I really think that it was great for the asset. And we can see that once it dropped, the volume really came back. We've started to see a lot more green candles on the way up. There's been a lot more buying than there has been selling. And that's a good sign because a lot of the people who wanted to sell, I believe they sold yesterday when it corrected. So that's a really, really good, strong sign for the future. But we need to keep watching. You know, just because we had one good, strong sign doesn't mean this is over, right? Doesn't mean the correction is over. It's starting to look like it might be over because we're having a very good recovery out of it. But we're in a key moment right here, okay? So what you can see is this descending triangle. So this large descending triangle, we have broken through it. So we dropped down below it. So the triangle told us all the right information. Make sure you follow me on Twitter because when I don't have time to do videos, I'll post updates there if I think they're important. I'm not going to give you stupid technical analysis updates on Twitter. I'm just going to give you important ones. So this one actually turned out to be perfectly accurate. We had the drop. We got support right at the 125 to 130 level where we expected it to come. And that support has now propelled us to break through the triangle. And now we're doing something very important. We're starting to flip that triangle into support. So that means if this line for this triangle flips into support, if we keep trading above this line and bouncing off of it like we are right now, I mean, if you look, if we zoom in on this, you can see we almost came back and touched the triangle. So what you want to see is you want to see a bounce off that triangle. And then at that point, you can have a pretty major move up. When you bounce off of any triangle, but in this case, a descending wedge, your move up can be equal to the original pump. Now, what that means is the original pump was about that big, right? So let's take, hang on, let's see if we can get a better line. So we take this line here, okay? This was our, okay, perfect. That's a little bit better. We'll make it go a little higher. So this was the original pump, right? That was the original pump. We're gonna change the colors a bit. We're gonna make the color a little brighter, and we will change this to a solid and thick line. So this line on the left-hand side was our original pump, right? So what you do is, just to give yourself an estimate, it's never 100% accurate, but if you put this here and we bounce off of this, what we're looking for is a move up to around 220 to 200, yeah, about 220. So we're looking to come back up to this line here and possibly break it. And if we flip that into support, that's a good thing. So that doesn't mean this is going to happen in 24 hours, right? This could take time to happen. We could continue trading at this line on the triangle for quite a while. You know, you might end up seeing movement like this if we do bounce off of this triangle, right? What we don't want to see is that we break through the triangle and keep moving down. That's not good. That's a bearish signal. But on the bullish side, which is what it's looking like right now, we're basically looking for trading to be like this, you know, stay within this line, and then at some point have a bounce off and start working our way up. Now, if that happens, that's a very bullish signal. When you bounce off a triangle like this means that during this entire correction, weak hands got out. People who wanted their profits, they sold, they got out, and now you have new buyers coming in. Maybe even some of the people who sold and realized they made a mistake, people are buying in at higher prices, and that is what moves the price up. So right now, this correction looks like it was really, really a wonderful thing. And I want to show you a couple of more things on EGLD, all right? One thing that I want you to look at is the moving averages. So we looked at the moving averages before. We're going to switch back to the 4-hour chart. Now on the 4-hour chart, we can turn on the EMAs. As I told you, these are the exponential moving averages. So the 20 exponential moving average is where we are now, and we are slowly starting to flip that and move back up. Now, one thing that you'll remember is that we always like to trade on top of the 20 exponential moving average. And right now, if you zoom in, you can see that's exactly where we are. And what I'm gonna do to make this a little bit more visual for you guys so you can see it better is I'm gonna remove some of these trend lines, and I'm gonna remove the triangle. Let's remove that. Let's also remove the fib. So now you can look at the price just with the exponential moving averages. Okay, so when we look at this, you can see that during the correction, we came all the way down and exactly touched on the 200 weekly 200 exponential moving average. Now, when we touched that exponential moving average on the 4-hour, we went up and we got support right on the 100 exponential moving average. Now, on our way up, we've gone above both the 50 exponential and the 20 exponential moving average, and now we are trading right on top of the 20. So what we really want to see now is that we continue the trend to trade on top of the 20 and then move up. And you'll see that in the past, basically, we have always stayed in line with the 20. So if we're back at the 20 now and we're moving up, we're looking really good. But this visual right here shows you why you want to look at the moving averages. I mean, look at this correction. The correction, it's uncanny, right? It touched exactly at the moving averages. You come down and you hit the 200. You go up and you start getting support again at the 100. Then we break through the 50 and the 20, and now we're getting support at the 20. And we know all too well that when you bounce up majorly, that bounce can happen off of the 20. So what I'd like to see is some more trading on this 20 exponential moving average, build up a little bit more support in this area here, you know, make this a little bit wider and then bounce off and take us back over 220 to start the bull run again, to keep moving up. That's what I'd like to see. Right now, I'm anticipating some sideways trading, but I definitely am ready to see more than that. So I keep looking at this all the time, and I want to make sure that if anything changes, I'm adjusting my strategy so I have moves that I can make. All right, so you should always do the same. Now, another thing that I'm going to show you, since we're done with those, is we're going to move on to the TD Sequential. So you can look this up in indicators and choose TD Sequential. Now, the TD Sequential is a very, very interesting thing. The TD Sequential basically gives you information on when an asset, I'm not going to tell you everything about it, but just the keys, all right? The number 9 in a TD Sequential is very important. So you can see here at the bottom left, there's a number 9 in red. So there's a green number 9, and then the candle is red. This means that we're expecting the asset to go down. But what happened here is we kept moving up. So if I take this and I switch this to the daily chart, take a look at the daily chart. So the daily chart shows that a 9 flashed here, meaning that it was overextended. We should start moving down, but instead, EGLD went up. It went up massively. And look at these candles. These candles that are bright pink, these mean that the asset's overextended. So we went up so far that based on this TD Sequential, it was yelling at us that we need a correction. And what did we do? We had a correction. And now you can see what's happened is that the TD Sequential has reset. The numbers have started flowing in again. This correction was enough to reset the TD Sequential. Then we had a red 1, a red 2. We had this bounce up. Now we have a green 1. So what I'd like to see is something like this where we have a green 1 all the way up to like a green 6. But you never really want to see a green 9. A green 9 means you're either going to trade sideways or you're going to go down. And if you keep going up after a green 9, it's over time quite accurate that you're going to see a correction. I've seen this work flawlessly in Bitcoin. I've seen it work in Ethereum, and I've seen it work in EGLD, and this is a great example of it. So we've looked at the TD Sequential here. Now let's take a look at the TD Sequential on the 4-hour. So on the 4-hour, the TD Sequential is showing us roughly the same thing. We had that 9 flash, we kept moving, but we reset earlier. Right? So that would have told you when the TD Sequential reset here, like, oh, it's not going to go down. It reset. Right? But the fact is, you got to look at other time frames. If you looked at the 4-hour, you might have been fooled. But if you looked at the daily, you would have seen that it did not reset on the daily. There was a 9 flash there. That meant that this asset was looking for a correction. So we're going to be looking at the TD Sequential a lot more. It's one of these indicators that I forget to look at a lot of the time, but I look at it later and I realize, wow, I should have been looking at this. So we're going to look more at the TD Sequential. Right now on the 4-hour, TD Sequential is looking good. It shows us that the move up from our correction is over, and now we're starting our green candles, and hopefully if we continue those, we'll keep moving up. Now, we'll keep an eye on this. TD Sequential on the 4-hour is pretty important, but more so, I'm looking at the TD Sequential on the daily. That's where I really want to see work happen. You can also go all the way to the weekly, and you can see there that on the weekly, we are still overextended. So the TD Sequential on the weekly is still showing the number 9, and we have not reset it yet. So you'll see here that if we look at the previous 9 flash on the TD Sequential on the weekly, it took anywhere from 4 to 6 weeks for that to reset. It actually took longer than that. It took 1, 2, 3, 4, 5, 6, hang on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 11. It took 11 weeks for the 9 on the TD Sequential to reset. So this is not something that you can look at day to day and expect the correction to happen immediately if there is more downside, but you want to keep looking at the weekly TD Sequential to see at what point does it reset, because that's a good indication that, okay, we're a little safe, because right now on the weekly, we are still showing as very overextended, meaning that we're still looking for more downside on the weekly until we get to a point where we can keep moving up. But the weekly is not always super accurate in these type of bull runs, right? It would have actually been, in a weird way, a lot better for us if this week we stayed at around 100 and next week we started going to 120. If that was the case, the weekly TD Sequential would have been reset, and on top of that, the weekly RSI would have dropped. The weekly RSI is still massively overextended. It's sitting at 94.5. And every time we've seen the weekly at that point, we've dropped. Now, that could be telling us that we are looking in the short term for not too much upside, not too much downside. We could be looking for a few weeks of just trading sideways, meaning we could go anywhere from, you know, like 140 to 170. In that $30 range, EGLD could just be stuck there for a while, for a few weeks, for this chart to start evening out and for the weekly RSI to start dropping, because it's very overextended right now. But either way, it took a long time for the weekly RSI to drop. The previous time it was that overextended, it took like 11 weeks, like I showed you before, for it to bring it down. But at that point, the price fluctuated between $32 at highs all the way back down to about $5. So it was massive moves to reset the RSI, meaning at this point, resetting the RSI back down to 43 is not out of the question, meaning that the price dropping over a number of weeks down to $43, $44, it's not out of the question. That could happen. And if that happens, then the question is, how long does it take to move back up? If it is even that bearish, we don't know if it's that bearish. It's too early on the weekly to really tell. We have to see how the next few weeks play out. But on the daily and the 4-hour, EGLD's looking really good. It's reset itself on the daily, which is awesome. It's reset itself on the 4-hour, which is awesome. And right now it's getting support at a key area to make a move up. Now, like I said, I don't want you to get too freaked out from what I told you about the weekly, but I want to give you honest information. The weekly is very overextended right now. Keep an eye on it, see how it plays out. And honestly, if EGLD starts trading sideways for a while and we see a lot more movement between $100 all the way up to $200, like it just keeps bouncing in this area. Like let's say we see movement like this, back up here, back down here, back up here, back down here. Like if EGLD trades like that for another month even, that is not a bad thing. You know, that's the thing. You have to look at this with, what do you believe in the project? Do you believe that the project has long-term success, or does it have short-term success? And if you're here for the long term, seeing moves like this, it's just something you got to get used to if you want to really catch the wave of an asset you believe in. And for me, EGLD would have to do a lot worse than this for me to get out of it. That's just my personal opinion. I can't tell you what to do. I'm not a financial advisor. So make your own decisions, do your own homework. But at the moment, for the very short term, it's looking quite bullish. And we want to see it bounce off of this triangle, and we want to see what it's going to do on the way up. All right, that's where we're at. Another video coming out in a couple of days with another update. Make sure you follow me on Twitter. I also opened up a Twitch account. I haven't started live streaming there yet, but I will at some point in the future. So check me out there, twitch.tv/crypto_div. Link is in the description, so make sure you follow me on both platforms, and that way you won't miss my first live stream when I go live on Twitch. And I'll catch you guys later. Hope you have a wonderful day. Take it easy.